Hello everyone, welcome to today's lecture and good morning. So today we are going to cover the SA700 series, but unlike last lecture, we are not going to just cover the practical side, but we will also go into the detail of the SA700 series, like the theory portions which are there. Okay, so we will be covering each and every area of SA700 series, or all the S700 essays series in detail with the theory. Okay. Now, when I talk about SS700 series, they are majorly related to the audit reports. They are based on the, they decide how to draft your audit report, how to form your opinion, whether it's the unmodified, modified, adverse, disclaimer for opinion, other matters within the audit report, like going concern paragraph, your EOM, other matter paragraphs, other financial information. So there are a lot many things which we'll be covering in this particular series. Okay. So altogether, this decides the audit report, the structure of the audit report, how the audit report is drafted, how you need to form your opinion after performing the audit. Okay. So very, very important, I would say, this particular chapter or this particular, these particular essays standards, because this is something, the base, whatever you do in your audit, this is something that you use as a reporting. Okay. Now, if the reporting is incorrect, then whatever you have done doesn't make any sense. It is not of that use. So that's why reporting is considered very, very, very important. During that, if you have any doubt, you can post it and I will take up that particular doubt. Okay. Okay. So let's start. Now, first, I will be starting with SA700. Now, what is SA700? And simultaneously, I'll be taking the notes over here. So I'll request you guys also to prepare the notes simultaneously with me, the way I am doing it. Reason because these notes will form a base for you at the time of exam to revise the whole standard. Quickly, that too quickly. Okay. So I'll request, please take the notes with me or create the notes in your own way. But you should create it because your own written thing will help you to revise the particular topic. Okay. So let's talk about SA700. Now, what is SA700? SA700 is something, talks about forming an opinion and reporting on financial statement. So, forming an opinion and reporting on financial statement. Okay. As the name suggests, SA700 helps us to form an opinion. Okay. What opinion we are going to give and how we need to report our opinion, which is based on financial statement, like how we need to report that opinion. Okay. So two things. One, forming an opinion. Second, reporting the opinion, which is on the financial statement. Now, the requirement, unlike like every essay, this has also has some objectives. The objective is this, that the auditor should form an opinion on the financial statement based on the evaluation and conclusion drawn based on all other standards and express clearly the opinion in the written form. Okay, express clearly the opinion written in the clear form. Okay, so that is the objective of this particular standard. Now, this standard forms some requirements that, okay, when you are giving an opinion on a financial statement, okay, you are required to present something, and I will show you with the help of the audit report itself. I'll show you one recently publicly released audit report, We will study that audit report, and by that audit report, I will provide you, okay, how we need to include things in an opinion. So this is independent auditors report. I suggest please do not go on the name of the company. It's not, something, uh, promotion sort of, but just, it's available on the internet, publicly available data, and we have to it. So independence auditor report. Now, when you see any audit report, any opinion under SS 700, you will see this particular title, Independence Auditor Report, because there is a requirement that we are required to show that it's an Independence Auditor's Report. Okay, the title should be Independence Auditor Report because we are independent. Okay, now, so that's the first requirement of the auditor's report. I'll highlight. Title, Independent Auditor's Report. And independent, it should clearly state that this is a report of an independent auditor, specifically. Okay. Now, the second thing in an audit report is that addressing, to whom we are addressing. Okay, to whom we are, issuing the audit report. If you see in the current case, we are issuing audit report to the members of the company. Okay, so these becomes our addressee. Okay, so these are the addressee to whom we need to issue the audit report. Then third, again, if you have, standalone or consolidated financial statement, here you issue a different opinion on the standalone or consolidated financial statement, correct? Now here, if you see, it is specified that the report is on the audit of standalone financial statement, not on the consolidated financial statement, because the company has the consolidated financial statement also. Okay, so you identify basically the FS. After that, very important paragraph, opinion. So the first thing is the auditor's opinion. In an audit report, you write first thing is the auditor's opinion. Okay, auditor's opinion, the first section of the audit is the audit report, which provides a background about your opinion. Now, not only just a background, but it also identifies the applicable accounting framework, okay, financial reporting framework for this particular audit. Let's see how. If you read over here, it says that we have audited the standalone financial statement of the company, which is comprises of standalone balance sheet as at this date and standalone profit and loss account, including other comprehensive income, standalone statement of changes in equity, standalone cash flow for the year, and then this and notes to financial statement, including a summary of significant accounting policies and other explanatory information. Now, what this paragraph has done is this paragraph has identified the entity whose financial statement have been audited. So this paragraph first identified the entity itself. This is the entity. Then this paragraph identified the financial statement that are audited. So these are the financial statements, standalone balance sheet, profit and loss account, everything till here. It's a identification of my financial statement. Okay. So this is identification of FS, financial statement. Then I need to identify each title or statement separately. So I'm identifying this each title or statement separately within the financial statement itself. Okay. So I'm not only saying that it's comprises of financial statement, but I identify each and every statement separately, which I'm auditing. So identification of FS plus each FS is separately identified. Okay. Then we need to refer to the notes, significant accounting policies, and explanatory information which is attached with the financial statement. So that is also given. Okay. Then we need to provide some details about the period, and that is within itself. Like if you see, so they have provided as at March ending, for the period of March ending. Okay. If you see year ended as at, so we are also talking about period. Along with the financial statements, we are also talking about period for which it has been audited. So this, whatever we are auditing in financial statement, the period of those statements, name of the company is the first paragraph of my opinion, is the first section of my opinion. Clear? Any doubt till here? Any doubt? Okay. Now, coming to next with what is there in my opinion is, let's read. In our opinion and best to our information and according to the explanation given to us, the aforesaid standalone financial statement gave the information required by the Companies Act in the manner so required to give a true and fair view in conformity with the accounting principles generally accepted in India of the state of affairs of the company as at 31st March 23, including and its profit and other comprehensive loss, changes in equity, its cash flow for the year ended on that day. Okay. Now what it says that according to the best of information and explanation given to us, the standalone financial statement gave the information required by Companies Act. Okay. Gave the information required by the Companies Act. Now, why I am mentioning the Companies Act over here? The reason is, one, the audit is being carried within the, as per the requirements of Companies Act. Plus, why I am required to mention Companies Act is because it is a compliance framework. Now, what is a compliance framework? If any one of you has gone through the previous lecture or read the study material, can anyone tell me what is compliance framework? Come on, guys. What is compliance framework I'm talking about here? Anyone? Okay. So, okay, Namrata. Good. Okay. Good, Ravi. Yes. See, the compliance framework refers to the financial reporting framework. Okay. Refers to the financial reporting framework itself, but it refers to the framework which is basically, set out some requirements. And there are actually two types of frameworks on which we report. One is a fair presentation framework. Second is a compliance framework. Now, to understand the compliance framework, we need to understand fair presentation and compliance fair presentation framework first. Okay. Now, when I talk about fair presentation framework, it's again financial reporting framework. Okay, it's a financial reporting framework that requires compliance with the requirements and of the framework, and it requires compliance, but requires compliance with framework, or you can say whatever guidelines are there. Okay, in other words, I can say, let's say for example, framework is the guidelines, standards, or whatever it could be. Okay, but along with that, there is some additional requirement. Along with that, it acknowledges explicitly or implicitly that to achieve the fair presentation framework, to achieve, the management needs to provide disclosures beyond specifically required by the framework. So if we comply with the framework, that is good, but to achieve to the level of fair presentation framework, we need, management needs to disclose additionally if required. Second, it acknowledges explicitly that it may be necessary for management to depart from a requirement of a framework to achieve fair presentation of the financial statement. And such departure may be necessary, but in rare circumstances. So, management needs to depart from requirement of framework. Okay. Management needs to depart from the requirement of framework, but these both are if applicable. So a fair presentation framework is a framework where the guidelines are there, plus the guidelines is saying that, okay, or you can say plus the framework is saying that you need to follow the guidelines, but you may require to disclose the additional thing which is necessary for the fair presentation, which I don't know as of now, but you might need to disclose at the time when it will be necessary as per the case-to-case basis, which is as of now might not be covered in the standards or guidelines, but you may need to disclose. Plus, you may need not to follow guidelines because it will be necessary at that particular point in time, case-to-case basis, to achieve a fair presentation. So that is fair presentation framework. So it gives a set of guidelines, but it says you might need to go ahead the framework, or you might need to go back of the framework. Going back means not following certain things if it is required to achieve the fair presentation, or going ahead means you need to disclose additionally if it is required for the fair presentation. So the main thing is fair presentation, okay, of the financial statement. That is fair presentation framework. Now, when I talk about compliance framework, compliance framework is a financial reporting framework that requires the compliance with the requirement of the framework. So it requires that it's a financial reporting framework. It requires compliance with framework. That's it. It does not put these requirements of fair presentation. These are the requirements of fair presentation. These are not present in that. So when we see a particular opinion, when I refer a company set, I say it's a compliance framework. The reason because we are required to follow each and everything of the company set. So that is the compliance framework I'm talking about. Give the information required by company set. So that's the compliance framework. But on the other side, I also provide a statement that give this financial statement in the manner so required, give a true and fair view in conformity with the accounting principles generally accepted in India. So this goes against towards my fair presentation framework. Okay, so this then goes towards the fair presentation framework. So what I did is just I provided the opinion, okay, that this either is based on the compliance framework plus fair presentation framework. Okay. Now, if I give this opinion, if I provide this opinion, which kind of opinion I'm giving? Anyone? Which kind of opinion I'm giving? If I'm writing these lines, which kind of opinion it is? Come on, guys. Correct. Correct, Ravi. Correct, Puri Ben. Correct, Namrata. This is unmodified opinion because I'm saying that it complies with the requirements. So this is an unmodified opinion. Okay, this is an unmodified opinion. And accordingly, I say that, okay, I comply with everything. It complies, my financial statement complies with the requirements. Okay. Now, there are few doubts. How to decide which framework is appropriate? So it's not how to decide, it's you need to decide which is applicable. See, fair presentation framework is always applicable. Like you have to report that whether the financial statement gives a true and fair view or not, in conformity with the accounting principle generally accepted in India. That is basic requirement of the audit. Unless and until it's a special kind of audit, but this is there. Okay. So if you are performing, the audit of a financial statement, in your opinion, you need to mention that the financial statement are prepared in accordance with the fair presentation framework. That is, in your opinion, the accompanying financial statement give a true and fair view. That is by default. Plus, if there is any requirement of any law or regulation, you need to report on that whether it complies with the requirement of the law or regulation or not. In this case, it's a company set. Okay, so accordingly, you can say that based on this, they comply with the requirement of company sector also. Clear? So it's not up to choose, but it's the one which is applicable. I hope I'm clear. Okay. I'll show you something more. Just give me 1 minute. So the way we are talking about fair presentation framework, okay, or compliance framework. So this is we are reporting as per the Companies Act. Here we are reporting this as per the Companies Act. What if there is any other act applicable other than the Companies Act? What we will do in that case? I'll show you that also. So this is for one of the banks. Again, don't go on the name, please. Now, if you see, again, in the opinion itself, our opinion to the best of our information and according to our explanation given to us, the aforesaid financial statement gave the information required by Banking Regulation Act as well as the Companies Act and the circular guidelines issued by the Reserve Bank of India in the manner so required for the banking companies and gave a true and fair view in conformity with the accounting standards specified under Section 113 of the Act. Read with Companies Act Rules 2021 and other accounting principles generally accepted in India of the state of affairs of the bank as at 31st March 2022 and its profit and its cash flow for the year ended on that day. Again, so what it is doing is it is highlighting which is my compliance framework like banking regulations, Companies Act, circulars and guidelines issued by RBI. Plus, it also giving the requirement that it gives a true and fair view in conformity with the accounting standards, okay, which are applicable. So it is again talking about two things: compliance framework, which are the laws and regulations applicable, and fair presentation framework. Okay. Coming back to the same audit report. Now, I hope it is clear that how we need to report on the basis of frameworks. It's not in our hand. We need to report whatever is applicable. Yes, according to the financial reporting framework, the verdicts will change. So if it is applicable Companies Act, then Companies Act. If it is applicable any other act, then any other. Okay. Now that was basically the opinion part we were talking about. Okay. When we are expressing an unmodified opinion on the financial statement prepared according with the compliance framework, the auditor is also required. Okay, is also required that he also required to state that the accompanying financial statement are prepared in all material respects. Okay, in all material respects, in accordance with the applicable financial reporting framework. So we need to provide that detail that okay, this financial statement are prepared as per required whichever compliance framework it is. Okay. Now, then the next section in the audit report comes the basis for opinion. Once I have an opinion, then I go basis for the opinion. Now, when I say basis for the opinion, the wording of this particular title of this paragraph will change. Now, this time we have a basis for opinion because our opinion is unmodified opinion. If the opinion is modified opinion, it will become basis of modified opinion. If the opinion becomes adverse opinion, it becomes basis for adverse opinion. Accordingly, the opinion, basis for opinion title changes. And this provides the basis that how you are concluding that your opinion is unmodified. So for that, there is a standard thing. Like, first you need to provide, if you are giving an unmodified opinion, means you have done the audit, means you have gathered all the evidence, means you have complied with all these standards and you have conducted audit in accordance with these standards. Otherwise, how can you get the modified opinion? You can get the unmodified opinion only when, okay, like you have complied with all these standards and you have not identified any observation. Two things: compliance with the standards of auditing and not identifying any observation after complying with that, that will lead you towards the unmodified opinion. So in that case, you need to specify that you have conducted your audit as per the standards on auditing. See, we have conducted our audit in accordance with the standards on auditing, okay, specified under section 143(10) of the Act. Then we provide what is our responsibility. So first, that conduct of audit in accordance with these standards. That's the first point we need to do. Then comes to the auditor's responsibility in the audit report. Okay, section of auditor's responsibility. Now, what is this section is? It says that what is our responsibility as an auditor. So, our responsibility under those essays are further described in the auditor's responsibility for the audit of the standalone financial statement section of our report. Okay, so I give a reference to the section where I have detailed enumeration and disclosure of my responsibility, and my responsibility is coming from the standards plus whatever laws and regulations are applicable. So my responsibilities are coming from that. So I provide a reference to that particular section. Then we need to include a statement that the auditor is independent of the entity. So talking about the independence with the relevant ethical guidelines. Okay. And auditor has fulfilled all the ethical responsibilities which are required as per the code of ethics issued by ICAI. So we will be talking about the independence and ethical requirement that is necessary reason because to show to the readers that we were independent, and the same is also reflecting from our title. So we need to specify that thing that okay, we are independent, and accordingly this is we have complied with the requirements of the code of ethics. So let's read. We are independent of the company in accordance with the code of ethics issued by the Institute of Chartered Accountants of India, together with the ethical requirements that are relevant to our audit of the standalone financial statement under the provisions of Act and Rules. When I say Act and Rules, it's the Companies Act. If you see Companies Act 2013 and you have a bracket Act and the rules, okay, thereunder, and we have fulfilled our ethical responsibilities in accordance with these requirements and code of ethics. So I specify that we are independent, okay, of the company based on the code of ethics issued by the institute plus ethical requirements that are relevant to our audit under the provisions of Act and Rules, and we have fulfilled those requirements. Okay, so what I'm saying is I first identify from where the requirements are coming, and then they saying okay, I have fulfilled those requirements basically over here. So we have fulfilled our other ethical requirements in accordance with these requirements and code of ethics. So ethical and independence requirement. Now the question may arise, can I interchange? Like for example, I don't want to write this particular sentence in this basis of opinion and I want to write in opinion. Can I do that? Answer is no. Straightforward no. Because SA 700 provides you the structure of your opinion. You cannot alter the structure of your opinion. That is for sure. Okay. You cannot alter the structure of your opinion which is provided under SA 700 unless and until you have been given option in the essay itself, and I will discuss about that option. But For these paragraphs, as of now, there is no option unless and until you have a basis of modified opinion, qualified opinion, or adverse opinion. A few sentences may get added, but otherwise, there is no way you can change the structure of the audit report. Clear? Any doubt? Any doubt, guys? So the question is that how then you will remember the structure. See, for that you need to read the reports. Take out the reports which are available on the internet. Read them, understand them, why they are in this particular format. There's a logic behind having all these things one after another. So when a reader reads the audit report, first he needs to understand about which audit he is reading. So I give the name of company. Then I want him to understand which are the financial statements which are audited over here. What is the subject matter? So he knows the financial statement with the year and the name. Then I gave him the requirements. Okay, what were the requirements that I checked? Compliance framework, fair presentation framework. So I give the details about that. Fine. I provide him opinion that okay, everything is good. There is nothing issue. That is good. Fine. Then I give the basis of my opinion. Okay, now whatever opinion I have given, what is the basis of that? Basis is that I have got the details which I was supposed to get. Plus, I am independent. So my details are also independently obtained. I have complied with the ethical requirements. That is something I specify in basis of opinion. Let's see the last line of the basis of opinion. So the last statement is where the auditor believes that the audit evidence the auditor has obtained is sufficient and appropriate to provide the basis for opinion. Otherwise, how will I provide the basis? So the basis for the opinion is the evidence, and I say that okay, if my opinion is unmodified, then my I have obtained sufficient and appropriate audit evidence. Okay, so let's see. We believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis for our opinion on the standalone financial statement. Okay, so standalone to provide the basis for the opinion, and we say that okay, it is sufficient and appropriate. Otherwise, how can you provide a basis which is unmodified? Okay, so I talk about sufficient and appropriate audit evidence. So that is how the opinion, basis of opinion is there in the audit report. Next comes the going concern paragraph, if that is there. If that is there, then the going concern paragraph will come. So I'll check if I have audit report which can provide you the details like going concern paragraph or show you some other aspects. Yeah, I do have. Okay, let me show you. Again, please don't refer to the name of the company. These are available publicly, and I'm just if I'm getting the details, I'm referring to them. There is no specific reason for using them, like them only. See here, earlier we were having opinion. Now we are having over here qualified opinion. Okay, So instead of opinion, we have a qualified opinion, and basis for qualified opinion, the title will change. The wordings will also change, and I will discuss this in detail once I will discuss, SA 705. Then I have a material going concern paragraph, that material uncertainty related to the going concern. Remember in SA 500 series, you might have seen in the previous lecture also, that in case when I identify if there is a material uncertainty, okay, related to going concern, or if the going concern assumption is used by the management is not appropriate, then I report that thing. So that comes over here, right? I draw the attention of the users to the particular matter which is of such nature that it requires the attention, like separate attention, and it is also required as per the SA standard. So what we do in the material uncertainty of going concern paragraph is we provide the detail, we direct the user on that particular item, or provide some detail about that particular material uncertainty or the events that cause significant doubt, okay, about the entity's ability to continue as a going concern. So what are those events? See, we draw attention to note number 10 of the consolidated financial results, wherein the auditors of this particular company have highlighted material uncertainty related to the going concern of this particular entity. Okay. However, the accounts of this have been prepared on the going concern basis for the reasons stated in the aforesaid note. So, need to refer the note. The auditors of the certain subsidiaries and associates stated in note 11 of the CFS have highlighted material uncertainty related to going concern. Emphasis of matter paragraph, key audit matters relating to the going concern in their respective audit reports. We draw attention to note number 13 of the CFS regarding the group's ability to meet its obligation is dependent on certain events which may or may not materialize, including restructuring of the loan, time-bound monetization of the asset, realization of the regulatory or arbitrary claims. There are material uncertainties which could impact the group's ability to continue as a going concern. However, the group is confident of the meeting its obligations in normal course of its business, and accordingly, the consolidated financial statement of the group has been prepared on the going concern basis. So I have identified events that cast significant doubt on entity's ability to continue as a going concern, and I may say there is a material uncertainty, but in this case, the auditor is saying that the use of going concern assumption is appropriate. And accordingly, he has reported the paragraph that is required. Clear? That is as per SA 570. Now, after that, after the going concern paragraph, the important paragraph comes is key audit matter. Again, we will be discussing that in SA 701 in detail. What are the key audit matters? How we need to report them. But after the going concern paragraph, it comes the key audit matter paragraph. So I'll skip the key audit matters. Okay. Then comes the other information paragraph. This other information paragraph is again based on one of the standards, that is SA 720. And I will be explaining you in detail when I will be referring to SA 720. But as of now, after key audit matters, it comes other information. Then comes the paragraph which states the responsibility of the management and board of directors with respect to financial statement. Okay, now this is the paragraph which is talking about management's responsibility. We all know it is a responsibility of the management to prepare the financial statements. Okay, preparation of the financial statement is a responsibility of management, not of auditors. Same thing, we need to write it here. So what we need to write is, we need to describe what is the responsibility of the management. See, The company's management and board of directors are responsible for the matters stated in 134(5) of the Act. Okay. Anyone? What is 134(5) of the Act? Have anyone, if you have gone through the Companies Act, if you're, paper 4, what is 135, 145?
Harshad PC.
What is section 134(5) about? Come on, guys. Quick question. What section 134(5) of the Companies Act is about? Pretty much easy. 134(5). No, Namrata. One 134(5). Very important section. Come on, guys. No? Correct, Tushar. So section 134(5) talks about the director responsibility statement and the matter which are required to be reported in that. So if you read 134(5), it talks about the director responsibility statement should contain these, shall state these items, that the accounts have been prepared as per the applicable standards. Okay. The directors had selected accounting policies consistently and have applied them. The directors had taken proper and sufficient care of maintenance of adequate accounting records. The director has prepared the annual accounts on a going concern basis. The director, in the case of a listed company, has laid down the financial controls, okay, such that the internal financial controls are adequate and operating effectively. The directors have devised proper system of, to ensure compliance with the applicable laws and regulations. So it states the director the matters which are there for the director's responsibility, or you can say what are the responsibilities of the directors becoming the responsibility of the management. So here also we specify what is the responsibility of the management. Like the company's management and the board of directors are responsible for the matters stated in 134(5) of the Act with respect to the preparation of these standalone financial statement that gives a true and fair view of the state of affairs, profit and loss, and other comprehensive income, changes in equity, cash flow of the company. Okay, in accordance with the accounting principles generally accepted in India, including Indian accounting standards specified under section 133 of the Act. So what I did is I specifically provided what is the responsibility of the management. Okay, so preparing the financial statement in accordance with the applicable financial reporting framework, internal controls, okay, preparation and presentation of financial statement that are free from material misstatement due to fraud or error. Then assessing entities' ability to continue as a going concern. Okay, then using or preparing the accounts on the going concern basis. Okay, so all these things which are there are already covered by 134(5). So I gave the reference of 134(5). Plus I provided that the accounts are prepared or the financial statement are prepared on the basis that it gives a true and fair view. So matters responsible or matters which are contained under 134(5) plus Financial statements that gives a true and fair view. Plus, when I say financial statement, then it states of affairs that the balance sheet, profit and loss, other comprehensive income, changes in equity, cash flow of the company. So I talk about each and every element of the statement. Plus, I provide that these statements or financial statement are prepared in accordance with the accounting principles generally accepted in India, including in Indian accounting standards specified under section 133 of the Act. Then I again specify that the responsibility includes maintenance of adequate accounting records in accordance with the provision of the Act for safeguarding the asset of the company and preventing detecting frauds and other irregularities. Okay. Selection and application of appropriate accounting policies, making judgment estimates that are reasonable and prudent, designing and implementing and maintaining maintenance of adequate internal financial control that that were operating effectively for ensuring the accuracy and completeness of the accounting records. Okay. Again, then presentation and preparation of the financial statement gives a true and fair view and are free from material misstatement, whether due to fraud or error. So even though it is stated in 134.5, I again reiterate all the things or all the responsibilities of management which are there. Like accounting records, safeguarding of assets, preventing, detecting frauds, selection and application of appropriate accounting policies, making judgments, designing and implementing internal financial controls, adequate internal financial controls, that were operating effectively. Okay. Completeness of the accounting records, preparation and presentation of financial statements that gives a true and fair view and are free from material misstatement due to fraud and error. So this is the responsibility of the management. Again, we also provide the responsibility of the management with respect to the going concern, that in preparing the financial statement, the management and board of directors are responsible for assessing the company's ability to continue as a going concern. Okay. Disclosing as applicable matters related to the going concern and using going concern basis of accounting. Unless the board of directors either intend to liquidate the company or cease to operation or has no realistic alternative but to do so. So we specify what is the responsibility of the management with respect to the going concern. Okay. The last one is the overseeing the reporting process. So board of directors is also responsible for overseeing the company's financial reporting process. So these are the management's responsibility. Any doubt? Any doubt? See, why I'm going line by line in detail the auditor's report, because so that you can get the understanding of the structure of the report. It is very important for you guys to understand the structure of the audit report, what it contains, and what are the things which are required to be reported in a audit report or an opinion, basically. So these are the mandatory things what we are referring here, mandatory, and these requirements are coming from SS 700. Tushar, if you are asking a section under company side, so yes, there is there. So there is section 134 financial statement, board reports and everything which specified what is the responsibility of the management, board of directors and everyone. So there are sections, there are, requirements already contained in the company side. So till now we were discussing management responsibility. Now the next section in the audit report should be, I could say, the responsibility of the auditor. First, to obtain reasonable assurance whether the statement as a whole are free from material misstatement or not. Okay. Number two, to gather the sufficient and appropriate audit evidence. Third, to issue an auditor's report that includes the opinion, to issue the opinion. Okay. Fourth, then I will be discussing about what are the responsibilities with respect to them, and I'll provide that. So let's read. I'll write it. Auditor's responsibility for the audit of a standalone financial statement. Now, what is responsibility? Our objectives are to obtain the reasonable assurance about whether the standalone financial statement as a whole are free from material misstatement, whether due to fraud or error, and to issue an auditor's report that include our opinion. So, line by line. First is our objective to obtain reasonable assurance whether the standalone financial statement as a whole are free from material misstatement, whether due to fraud or error. Okay. So, to obtain reasonable assurance, not the absolute, but the reasonable assurance about FS that they are free from material misstatement. And why I'm emphasizing this reason, because I write material misstatement. There could be misstatement which is not material, because I work on the basis of materiality. And why I bring materiality into the picture? Because I want to issue a reasonable assurance, not the absolute assurance. That's why I am issuing a reasonable assurance. That's my responsibility. That's why I am talking on the materiality level, not on the complete level. So I could say that okay, financial statements are free from material misstatement. There could be misstatement which are immaterial. So that's why I am giving reasonable, not absolute assurance. Second, the thing is that to issue auditor's report that includes our opinion. Okay, that is my responsibility, to issue an opinion or to issue a report that includes the opinion, basically. Okay, so here I'm talking about the opinion. Okay. Sorry, just a minute. So I'm talking about the opinion over here. So that is the second my responsibility. Now, the way I explained you about the reasonable assurance, I need to explain to the readers also, because every time I will not be available with the audit report. Okay, this is reasonable assurance, and that's why the material misstatement is there. Okay, so I need to write a paragraph about that. I need to write some sentence to explain to the readers, because I cannot go personal with each and every reader. Okay, this is reasonable assurance, and what I mean by the reasonable assurance. So what I do is I write a statement that reasonable assurance is a high level of assurance, but this is not a guarantee that audit conducted in accordance with the SA will always detect a material misstatement when it exists. Material misstatement can arise from fraud or error and are considered material if individually or in aggregate they could reasonably be expected to influence the economic decision of the user taken on the basis of these standalone financial statements. So I explain them what is reasonable assurance, what is materiality concept here, and the misstatement which are material. Okay, so I explain them all these details so that they can understand basically the requirement that is there. Okay, like they can understand what I am explaining here to them, like about the reasonable assurance, about the materiality and everything. Okay, so about the reasonable assurance, then about the misstatement. So I explain these terms. means material misstatement. So I explain these terms to the reader. Okay. Now I also provide as a part of the audit or in accordance with the standards, I am required to exercise professional judgment and maintain professional skepticism. Okay, and what I am additionally required to do accordance with the audit that I specify over here. So let's see. As a part of audit, in accordance with the essay, we exercise professional judgment and maintain professional skepticism throughout the audit. We also identify and assess the risk of material misstatement of the standalone financial statements, whether due to from fraud and error, and design and perform audit procedure responsive to those risks. Now I'll stop till here. That I identify and assess the risk of material misstatement, whether due to fraud and error. Can you recall some standard which talks about this particular area? Can you recall some standard which talks about identifying and assessing the risk of material misstatement? Is there any standard which on the similar lines? Come on, guys. Correct, Ravi. Is there any standard on the similar lines? Okay, Purvi Ben. Correct, Namrata. Come on, guys. So, auditor's responsibility are covered within the standard itself, and standards also provide what are the responsibilities of the auditor, correct? Same way, if I'm writing the responsibilities of auditor in the audit report, it will come from there only. So that is, if you see, this is nothing but the SA 315. It's nothing but SA 315. If you read the title of the essay itself, it says identifying and assessing the risk of material misstatement through understanding the entity and its environment, which is imposing a requirement on the auditor of identifying and assessing the risk of material misstatement. And the second line, till here it was the first part. The second part from here, designing and performing audit procedures responsive to those risks. Can you recall which essay requires us to respond to the risk of material misstatement? Or which essay requires us to prepare a response to the assessed risk? Absolutely correct, Namrata. Okay, Tushar. Good, Purvi Ben. Absolutely correct. That is essay 330. auditor's response to the assessed risk. If you see that particular essay itself, and if you go to the objective, it says that the objective of the auditor is to obtain sufficient and appropriate audit evidence about the assessed risk of material misstatement through designing and implementing appropriate response to those risks. So designing and implementing or designing or performing audit procedures responsive to those risks. That is coming from my essay 330. Even if you read this particular line, that as a part of an audit in accordance with essay, we exercise professional judgment and maintain professional skepticism throughout the audit. Okay, this is also coming from one of the standard. This is also there from one of the standard, and that is anyone, any guesses which from which standard it is coming? To maintain professional to exercise professional judgment and to maintain professional skepticism. Also, this one also coming from the same standard, and to obtain sufficient and appropriate audit evidence that is sufficient to provide a basis for our opinion. So these three lines are coming from one single standard, which is that. Absolutely correct, Ravi. Correct, Namrata. The first standard that we study is the overall objective of the independent auditor and the conduct of an audit in accordance with the standard. If you see, there is a section in that standard, requirements, which talked about the ethical requirements related to audit of financial statement, professional skepticism, professional judgment, sufficient and appropriate audit evidence. So that is coming from there. This is my essay 200, nothing else. Even what we saw over here, that the ethical requirements in start, that is also coming from essay 200. The auditor shall comply with the relevant ethical requirements. But here we are more specific. Reason because some of the ethical requirements and independence requirements are coming from Companies Act also. Then we report here the risk of not detecting a misstatement. Let me first write the reference with this. Okay. Then the risk of not detecting a material misstatement resulting from fraud is higher than one resulting from error, as the fraud may involve collusion, forgery, intentional omission, misrepresentation, and override of controls. So we are specifying the risk from not detecting a material misstatement resulting from fraud is higher than resulting from error. Okay, so we just provide the background about the fraud. And if you read the essay 240, okay, that is auditor's responsibility relating to fraud in a financial statement. So that particular essay also talks about the same thing. Okay, there is a whole section in that particular essay, responsibility of the auditor, which talks about that owing the inherent limitation of the audit, there is an unavoidable risk that some material misstatement in the financial statement may not be detected. Okay, and the risk of not detecting a material misstatement resulting from fraud is higher than the risk of not detecting one from error. Same, it is coming from my essay 240, para 6. Because auditor responsibility are already there in standard. There is nothing new, you are putting it here. Then comes the obtaining an understanding of internal controls relevant to the audit in order to design audit procedures that are appropriate in the circumstances. Under section 143(1) of the Act, we are also responsible for expressing our opinion whether the company has adequate internal financial controls. Sorry, 143 3I, not 1. So my mistake. 143 3I. That the company has adequate internal financial controls with reference to financial statement in place and operating effectively of such controls. So, internal financial controls over financial reporting, the requirement of that. Clear? So, that is the case. We provide the details about internal financial controls. Then it talks about evaluate the appropriateness of the accounting policies used and the reasonableness of the accounting estimate and related disclosure made by management and board of directors. Okay. So again, when I talk about accounting policies and reasonableness of accounting estimates and related disclosures made by management, it's coming from one of the essay, which is essay 540, accounting estimates and related disclosures. So I'm again reiterating the responsibility which is already there in essay 540. Then I need to provide that my responsibility includes that conclude on the appropriateness of the management and board of directors use of going concern basis of accounting in presentation of standalone financial statement based on audit evidence obtained, whether a material uncertainty exists related to the events or condition that may cast significant doubt on the entity's ability to continue as a going concern. Okay, and if we conclude that a material uncertainty exists, we are required to draw attention in our auditor's report to the related disclosure in the standalone financial statement, the way it was done in the previous report. See over here. Drawing the attention to the relevant note in the financial statement. That is the same we are writing our responsibility. Yes, that's our responsibility. Or if such disclosure are inadequate to modify our opinion. Okay. Our conclusions are based on the audit evidence obtained up to the date of auditor's report. However, future events or condition may cause the company to cease to continue as a going concern. So we are writing the detailed about going concern and our responsibility with respect to that. Clear? So I provide a disclosure with respect to that in my audit report, that what is my responsibility with respect to going concern, with respect to reporting about the going concern. Any doubt till now? And this, this comes from essay 570. Any doubt? Yes, Tushar, appropriately correct. So whatever you have learned till now in various standards, you are putting everything together. Clear? Then the next requirement comes, evaluate the overall presentation, structure and content of the standalone financial statement, including the disclosures, whether the standalone financial statement represents the underlying transactions and events in the manner that achieve fair presentation. The way I was discussing about fair presentation framework. So we are specifically talking about fair presentation framework requirement. Okay. Now, again, so we will from standards only, we will try to specify the requirements over here. Like what were the auditor's responsibility and the requirements, and we'll report it over here that these are our responsibilities. Let's see. We communicate with those charged with governance regarding the matter regarding the matters that are planned, regarding the matters that are planned, scope and timing of audit, significant audit findings, including any deficiency. Okay, just give me a minute. Deficiencies in internal controls that we identify during our audit. So it's nothing but which I say, if we communicate with those charged with governance regarding other matters, plan, scope, timing of audit, significant audit findings, including any significant deficiency. Which essay is this? Which essay is this? Okay, Janvi. Come on, guys. When we communicate with those charged with governance and the management about the significant matters, plan, scope and timing, including any significant deficiencies in internal control, which essay we are referring to? Correct, Purvi Ben. But there is one more. Okay, Tushar. So we are referring to essay 260 plus 265. Essay 260 plus 265. That is, essay 260 talks about communication with those charged with governance, and we have a specific requirement in that essay. Okay, we have a specific requirement that if the auditor the requirement is what we are required to communicate with the management, like auditor's view about significant qualitative aspect of the entity's accounting practice, significant difficulties encountered during the audit, significant matters arising during the audit, circumstances that is affecting the form content of audit report, any significant other matter that is arising from the audit. Okay. We are also required to communicate with those charged with governance overall plan, scope and timing of the audit, which includes communicating about significant risk identified by the auditor. This is the requirement which is enumerated in the standard itself. Just reiterating, nothing else. I'm just reiterating these standards. Essay 260 plus essay 265. So if you are already aware, okay, about the requirements which are placed in these standards, you already know this section. There is nothing new for you. See, we also provide those charged with governance with a statement that we have complied with the relevant and ethical requirement regarding independence, and to communicate with all the relationship and other matters that may be reasonably be thought to bear our independence and where applicable related safeguards. Again, I'll tell you, this is as per the standard. This is again as per one standard. And that is anyone, which standard I'm talking about? It's same, essay 260. Essay 260 says that a statement that the engagement team and other firms as appropriate, where applicable, firms in the network firms have complied with the ethical requirement and independence. Okay, all the relationship and other matters between the firm, network firm, and the entity that in auditor's profit that shall be allocated to the categories, uh, you know, to different categories of the service, and that may have an impact or effect of the service on the independence of the auditor. So all these things are already covered under SA 260. Then we are required to report the responsibility that is from the matters communicated with those charges governance. We determine those matters that were most significant in the audit of the standalone financial statement of the current period and are therefore key audit matters. Okay, so we describe these matters in our audit report unless law or regulation precludes public disclosure about the matter when in extremely rare circumstances we determine that the matter should not be communicated in our report because the adverse consequence of doing so would reasonably be expected to outweigh the public interest benefit of such communication. So this is the requirement which is there as per SA 701. We are yet to cover this essay, but this is coming from that. So if you see, we have given the requirements which are there within the essay itself, nothing else. Now, this paragraph, report on other legal and regulatory matters, is based on the Companies Act. If you see, so when we are required to report as per the legal and regulatory requirements, this section changes accordingly. Now, as required by the CARO, so we have issued a statement and it is in the annexure A. As required by section 143 of the Act, Companies Act, all the matters of 143(3) are there. Okay. With respect to Rule 11 of Companies Auditors and Audit and Auditors Rule 2014, there are certain matters which are required to be reported, and those matters are over here. Auditors report under section matters that are required to be included under section 197(16). Again, that is here. So this is based on the Companies Act. That's why it's known as a legal and regulatory requirement. So report on other legal and regulatory requirements based on the Companies Act. Now, this may change. Let's say, for example, see over here. This is for the bank. Okay, and accordingly, my legal and other legal and regulatory requirement will differ. Like required by Banking Regulation Act, whatever it is required under whichever act is applicable, I need to report it over here. Okay, so accordingly, the legal and regulatory requirement changes with the change in laws and regulations. Okay, now there are two more paragraphs. One is here already. If you see the other matter paragraph, and second is emphasis on matter paragraph. So other matter paragraph or emphasis of matter paragraph are required to be included over here as per SA 706. Before report on other legal and regulatory requirements, I can include other matter or emphasis of matter paragraph. So OM or EOM as per SA 701, oh sorry, 706 can be included. And we'll see when we'll discuss SA 706. So this is the audit report that we were discussing. Again, if this is a group engagement, Okay, then I need to specify some additional requirements. I'll show you. If this is the audit of a consolidated financial statement, a bit of requirements changes. See, this is audit report on the consolidated financial statement. Okay, first of all, my title changes accordingly. Consolidated financial statement. Few of the things will remain same, but wherever it's standalone financial statement, now it will become consolidated financial statement. Accordingly, my key audit matters and everything will change. There is one more paragraph that will be added. We have discussed in last lecture is the other matter paragraph. This particular essay or this particular paragraph or particular portion of the paragraph is as per essay 600. Remember, when we are using the work of other auditors, another auditor, we are required to report upon the work that is performed by the another auditor, and we are relying upon the same. So that is something which comes when it is a group engagement, or it's a audit of a consolidated financial statement, and there is something that the work has been performed by other auditor. So accordingly, that is reported over here. This is as per SE 600. Okay. Then at last of the audit report, there are two things that is necessary. Signature of the auditor. Okay. Then date of audit report, place of audit report. These are necessary. So we take it lightly, but this is not the case to take it lightly. These are necessary details. The firm number, firm name, firm registration number, plus you didn't generate it. So all these things are mandatory. Detail about the member or the person who is signing, or detail about the auditor, detail about the firm, okay, firm registration number, date, place, and you did. All these things are necessary as the closing which is there. Clear? Any doubt? So this is how the audit report is. Any doubt, guys? I hope now it is clear how the audit report is drafted. How audit report, what paragraphs are there, what is the logic behind these paragraphs, everything, how this works. I'll suggest when at the end of this 700 series, you will be more clear with all the paragraphs, including key audit matters, other matter paragraph, qualified opinion, adverse opinion. I'll be showing various type of opinions. So as of now, you are just seeing one unmodified opinion and related paragraphs. But when you see other paragraphs also, it will, you will have a clarity on those paragraphs also. Okay. Okay. If no further doubts, what I suggest is let's take a quick 10-minute break. We'll gather back after the break. I'll do some practical questions on this only. Okay. And then we'll move forward to the next section. Okay. Let's take a quick 10-minute break. So, hello everyone, welcome back. Okay, now let's discuss few things before we move forward and proceed forward. Let's discuss few things. Let's say, for example, okay, let's say you are auditing and you are issuing an audit report. So this is what we saw an audit report which is issued for a company incorporated in India. Okay. Now let's say for example, you are auditing for a company which is not situated in India but situated in other jurisdiction. Let's say some other country altogether different. Okay. In that case, what you would do? In that case, let's say, for example, if we have a standard on auditing applicable in India, what you would do for the standards that are applicable for in that region? Let's say I'll give you with an example. Let's say Mr. X, the auditor of MNC INC, okay, company incorporated in Nigeria. Okay, let's say, for example, company incorporated in Nigeria. Mr. X, the auditor of MNC incorporated in MNC incorporation, company incorporated in Nigeria, has to issue the audit report under local laws, okay, wherein the local laws requires to follow Nigerian standards on auditing. Issue the audit report. Whether you will issue as per Nigerian essay or essay issued by ICI. What you will do? What you will do if the law requires you to follow Nigerian standards on auditing? Will you issue under NSA or will you issue as per standards issued by ICI? Come on, guys. What you will do? Okay. Good, Purvi Ben. Good, Janvi. Okay. So if that is the case, in that case, what auditor is required to do is he is required to report as per both. I'm required to mention both that it's in accordance with the standards on auditing issued by ICI and internal auditing standards. So international standards on auditing or auditing standard of that particular jurisdiction. And I need to do that only when there is no conflict between both. There is no conflict between both. Okay, that can lead to a different opinion or different structure of the audit report. Plus, the I am required to include whatever we have discussed till now. Okay, in the format of audit report, auditor responsibility, management responsibility, and all those things. I am required to include that as a bare minimum. So I should include the paragraphs at minimum which we discussed. If I can do this both, then I'm fine. I'll report as per both of them. Otherwise, I need to identify where the difference lies and why and what will be the impact of each difference between these standards, and accordingly I need to report. If there is no difference, then I need to report according to this way. Like I can include the name of both. Clear? Any doubt? Okay. One more question, if no doubt. Let's say ABC Limited online e-commerce platform, okay, appointed Mr. X as statutory auditor for FY 22-23, along with financial statement prepared as per applicable financial reporting framework. Management attached the growth statement. Okay, attached the growth statement, which included that which included the growth trajectory or you can say forecast for coming 5 years, and an estimated valuation of company during those 5 years. As these were issued with financial statement. Management of ABC asked Mr. X to audit them and to include in their opinion. Okay, so there is something new growth statement which management has came. They have prepared, which includes the forecast for the coming 5 years and the estimated valuation of the company. Now these were issued with the financial statement, so they were like balance sheet, profit and loss account, changes statement and changes in equity, cash flow statement. Then there is a growth statement which are included in the financial statement itself. Now management is saying that okay, this is included in the financial statement. You should also issue an opinion on this. Audit and include in your opinion. Mr. X has approached to you to understand whether the same can be included in the opinion or not. So you need to guide Mr. X whether he can include this statement in his opinion or not. So I hope the question is clear. The question is, management has prepared a growth statement which included, the forecast for coming 5 years and an estimated valuation of the company during those 5 years. These were issued with FS. So these are issued with FS, like balance sheet, P&L, statement of cash flow. Along with that, there is a statement of growth. Okay. And now ABC is approaching Mr. X to include this in their opinion. Can Mr. include this in his opinion or not? Can Mr. X include this in his opinion or not? Come on, guys. Can this be included in the opinion or not? Correct, Janvi? Okay, Purvi Ben. Come on, guys. Whether I can include this in the opinion or not. Come on. I'm awaiting for the answers. other information which is not as per the financial reporting framework, it's over and above that, we call that information as a supplementary information. Okay, we call that information a supplementary information. Now, in the current case, the supplementary information is statement of growth. Okay. Whenever there is a supplementary information which is okay not required by the financial reporting framework and is presented with the audited financial statement. Okay. So if the supplementary information is presented with financial statement and is not required as per applicable financial reporting framework, then you need to evaluate. The auditor needs to evaluate, okay, whether in his professional judgment the supplementary information is integral part due to its nature of the financial statement, like whether the supplementary information, that is SI, is integral part of FS. Like, although it is not required to be presented as per FRF, but we are doing to achieve the fair presentation framework. Again, I'm going back to the fair presentation framework. Okay, so to achieve the fair presentation framework, we are, issuing this so that, it's a part of the integral part of the financial statement itself. And when I say integral part of the FS, means it is providing some clarification on the numbers or data or anything which is there in the FS, or it is, explaining more the details which are there in the financial statement. Then only I can say it's an integral part. Okay. If yes, then yes, I should include in my opinion. But what if I say no, it's not an integral part of my financial statement, means it's not providing any additional information to any item which is there in the financial statement, rather it's something estimates, which I'm not required to audit. I audit the historical financial information, not the estimates. I do audit estimate, accounting estimate, but not the future forecast for, next 5 years forecast. On the name of estimate, I cannot, audit next 5 years forecast. That is not possible. Okay. And if you try to do also, let's say, for example, like someone might question you, someone might think, okay, no, we still we'll try to do to, we'll audit the future forecast and, the data for the future. Then there is something which is stopping you, and there is a, you could say, not allowed and prohibited. Okay. And where it is prohibited, you will tell me. Now, if you want to issue an opinion on the future forecast, okay, if you want to issue an opinion on the future forecast, then you tell me where it is, prohibited, or where you will be, punishable. if you vouch for the accuracy of the forecast, where you can be, be punishable. Any guesses? Come on, guys. Where you will vouch, if you vouch the accuracy of forecast, where you can be punishable. We have already discussed. I think you might have already read somewhere. Absolutely correct, Janvi. Partially, I'll say answer is partial. Reason because you need to provide more details to be specific. Come on, guys. Where you can be, punishable if you vouch the accuracy of a forecast. Correct, Janvi. Absolutely correct. I just received only one answer for this question. That is not good. Not good. So you guys are I think not paying the attention. There is one particular, okay, I'll tell you. If you vouch for the accuracy of the forecast, okay, if you vouch for the accuracy of the forecast, you can be held guilty of professional misconduct under clause 3 of part 1 of schedule 2, which says that if a chartered accountant in practice permits his name or the name of his firm to be used in connection with an estimate of earning contingent upon the future transaction in a manner which may lead to believe that he vouches for the accuracy of the forecast, then he can be held guilty for the professional misconduct. And there are various cases on that. There was a case of DGM inspection with respect to Tamil Nadu Mercantile Bank Limited versus RBK Samuel. Okay, disciplinary proceedings of October 2011. There was a recent case also where by the Kolkata High Court issued, which was Binod Kumar Agarwal versus CID of Kolkata. Okay. So in that case, if you vouch for the accuracy of the forecast, if you vouch for the accuracy of the forecast, then you can be held guilty of professional misconduct. Now, if I vouch here in the current case, the growth statement, It is I'm something, vouching for the accuracy of the forecast. I shouldn't be doing that. Number one. Number two, it's not an integral part of my financial statement. And hence, again, I shouldn't be, issuing an opinion on that. And this supplementary information is not required by a financial reporting framework. I cannot consider this information as an integral part of my financial statement. And if that is the no, okay, then I need to ask management to separately present, okay, or sufficiently and clearly differentiate it from the financial statement. So I'll ask management, please sufficiently and clearly differentiate the supplementary information, okay, from audited financial statement, so that people can understand, okay, this is different, this is not. If management denies, okay, that they will not do, okay, then in that case, okay, in that case, the auditor shall identify such information, okay, such unaudited supplementary information, okay, and explain in auditor's report that this supplementary information is not audited. Okay. So first ask management to identify supplementary information and sufficiently and clearly differentiate from the audited financial statement. And if management denies, the auditor can, identify the information in his audit report and can explain that this information is not audited. Any doubt, guys? Any doubt? Okay. So there is one doubt that, but banks always require projected, signed projected financial statement. No, see, uh, see there is something which we are not supposed to do. That is, as per the schedule also. If you'll vouch for the accuracy of a forecast, you'll be held guilty of professional misconduct. Okay. Now, again, there are multiple things which are involved. So there is a guidance note also issued. Okay, if you are, uh,
providing any information in the company prospectus, if you are if you are required to issue any opinion on the information contained in the company's prospectus, then there's guidance note that talks about that. Okay, so you can refer to that guidance note. Other than that, I don't think so there is anywhere required that the auditor is required to sign future estimates. Okay, he's required to vouch the future estimates. Okay, so I don't think so that is required. So you can also refer a recent case law which is there on that, which was, as I told you, Binod Kumar Agarwal versus CIT, which was there for the on in issued by the Honorable Kolkata High Court. So you can refer to that case also. Any doubt? Okay. Now that was something which was there in SS 700, which was talking about unmodified opinion. Okay. Before I like go to next essay, that is 701, I what I suggest is let's go with the modified opinion first, so that you guys can have a clarity that how modified opinion in essay 705 works. Okay, now we saw unmodified opinion, so there is one more essay which talks about modified opinion, modification to the opinions. Okay, and this modification to the opinions in the independent auditor report is required to be done in a certain way. Okay, now when I talk about modification, modification either can be my qualified opinion or it can be adverse opinion. Okay, but whether it's a whether it's a qualified opinion, adverse opinion, or disclaimer of opinion, there are certain guidelines for all of three to decide that how the modification should be there. Now that is basically on the pervasiveness and of the effects or possible effects of the matter of the financial statement, and I'll explain in a while how that is what is pervasiveness and how it is coming. Okay, so SA 705 requires that the auditor should conclude based on the audit evidence available to him that whether there is a modification required. If modification required, then whether the financial statement are whole free and not free from material misstatement or not, like which category of modification it is there. Or if auditor is not able to obtain sufficient and appropriate audit evidence, then auditor is required to report accordingly that he is not able to obtain sufficient and appropriate audit evidence. Okay, so when I say modified opinion, there are three modified opinion: qualified, adverse, and disclaimer of opinion. Sorry. So one is the qualified. Another one is the adverse. Okay. And the third one basically is the disclaimer of opinion. Now, disclaimer of opinion is something where you are not able to get any audit evidence. Okay. So you are not able to get any audit evidence. You are disclaiming that, okay, I'm not able to get any audit evidence in this case. Now, when I can say it's a qualified opinion, okay, if I want to say it's a qualified opinion, what I need, when can I say that? Or when can I say it's a disclaimer of opinion, or when can I say it's an adverse opinion? Anyone? When can I say first it's a qualified opinion? How can I distinguish it's a, okay, I have identified misstatement. How can I say it's a qualified opinion? Although misstatement is there, why not adverse? Why not disclaimer? Why only qualified? So if I want to say, okay, I want to issue a qualified opinion, on what basis I will decide? Any idea? On what basis I will decide my opinion? Come on, guys. If I have to decide my opinion, on what basis I will decide? There should be some basis. Okay, on the basis of this, I can decide my opinion. Absolutely correct, Puri Ben. Good, Janvi. Okay. So, if my financial statement contains any misstatement, if there is a misstatement in the financial statement, or financial statements are materially misstated, if the financial statement are materially, okay, misstated, materially misstated, in that case a modified opinion could be there. But if the misstatement is material and and not pervasive, if the material misstatement, if the misstatement is material but not pervasive, financial statement are materially misstated but not pervasively misstated, means the misstatement is not pervasive. Okay. In that case, I will issue a qualified opinion. Okay. In that case, I'll issue a qualified opinion. And misstatement is not pervasive. Okay. So I will issue a qualified opinion. If the financial statement are materially misstated and misstatement is pervasive, the effect of misstatement, okay, is pervasive, then I will issue adverse opinion. Third, disclaimer of opinion is when I am not able to obtain sufficient and appropriate audit evidence. Okay, so inability to obtain sufficient and appropriate audit evidence, okay, and resulting because of that, the possible effects of misstatement could be material and pervasive. In that case, I need to issue a disclaimer of opinion. So how I'll present in with the way of another chart. Okay, what happens is when we do a testing. Okay, when we do a testing, we need to evaluate the result of testing. At the time of the evaluation of the result of testing, I can say, okay, I have obtained sufficient and appropriate audit evidence. Or I could say, okay, I have not obtained sufficient and appropriate audit evidence. If I have obtained sufficient and appropriate audit evidence, okay, then I will say, okay, fine, I'm happy. I have obtained sufficient and appropriate audit evidence. It's an unmodified opinion. Now, when I say I have not obtained sufficient and appropriate audit evidence, there could be, okay, there could be two things. One, I could say there is a misstatement. Okay, I could say there is a misstatement undetected or identified. As of now, we'll keep at misstatement only. Okay, I'm saying, okay, I have not obtained sufficient and appropriate audit evidence, or based on the evidence what I have obtained, there is a misstatement in financial statement. Okay, misstatement in FS. Or I could say that, okay, the second side is I have not at all obtained any evidence. Like I am not able to identify whether I have misstatement or not. Okay, so not obtained any evidence or information slash. Now, when I say there's a misstatement, I need to consider the effect of the misstatement. If the effect or possible effect of misstatement that is identified is material but not pervasive, then simple, I will issue qualified opinion. Okay, if the impact is material and pervasive, then I will issue adverse opinion. Okay, I'll as of now switch. I'll tell you why. Now, what if I am saying that, okay, what if I am saying that the impact over here, okay, of not getting any information, I need to consider the impact of not getting any information is also there. So I need to consider the impact of not getting information. If I say the impact of not getting information is the effect or impact of inability to obtain information is material but not pervasive, then again I will issue a qualified opinion. But if I say it's material and pervasive, I say that okay, the impact of or the possible effect of not getting the information is material and pervasive both. Okay, so I say that okay, the information I have not received, because of that I can say that the impact is material and pervasive both. In that case, I need to issue disclaimer of opinion. Okay, so if I am not getting appropriate and sufficient audit evidence, I'll issue qualified opinion when the impact is not or the effect is not pervasive. But if it is pervasive, I'll shift to the disclaimer of opinion. Clear? How this is how the testing is working, the results of testing. Any doubt? Okay. Now, the next part to understand is what is pervasive that we are talking about. When I say pervasive, what I mean by that, like when I can say misstatement is pervasive to the financial statement as a whole, that is very important to understand because your type of modification will depend upon the analysis or the evaluation of pervasiveness of the is that it is not limited to one particular element or account item of the financial statement. So the effect or possible effect. And why I use the word possible effect is because there could be misstatement which I have not detected. I might not know about those misstatement, and there could be a possible effect of those misstatement. Okay. Now, for the possible effect or the effect of those misstatement, I can say they are pervasive when the effect or possible effect are not confined to a particular element, to specific element, particular element, account, or items of financial statement. For example, okay, so there was a transaction, okay, long-term contract, wherein I did not recognize the revenue appropriately. So long-term contract, in that revenue recognition was not proper, resulting in an overstatement of revenue, overstatement of accounts receivable. Okay. Now, if this was not proper, then because of that, there is an impact on my sales commission or any, commission or anything that is related to sales. Let's say sales commission was not proper. Because of that, it was also overstatement of sales commission. Now, let's say, for example, the contract includes the warranty requirements, provision for the warranty. So my warranty provision was inappropriate. Okay. Then let's say, for example, I had some, liability within the contracts or something, which is related to my recognition of the revenue, some portion of the liability. Hypothetical example. If that is the case, let's say my liabilities are also, not appropriately recorded or something like that. So the impact is not limited to one specific account, but is, spread over multiple elements or accounts of the financial statement and together. Okay. And these are material. I am saying this is material and spread to multiple accounts. In that case, it becomes pervasive. Second, let's say, for example, if it is confined to particular account, but it is of such proportion. Okay, it is of such proportion that it is representing substantial portion of FS. For example, remember in one of the previous example, we discussed about a company which was having inventory of gemstones. So let's say I'll take that as an example only. Opal Stones Private Limited, remember? So it was having inventory value, let's say rupees 600 crores, because these are the costly gemstones, valuable gemstones. Now the annual turnover for this company was rupees 200 crores, and they have the inventory more than the turnover, because these gemstones are not, bought and sold frequently. These are something, they are collected over the times, over the years, and they are gradually then sold out. Okay. So some companies deals in rare gemstones and rare artifacts. Okay. And these artifacts is not like that you buy daily basis, you sell it out, you get it replaced with the new stock. No. These are collected over the times, artifacts, gemstones, and everything, and you gradually sold those out. Now, what if the inventory is fake? Fake inventory. Now, in this case, the impact is confined to the inventory. I agree, but it is of such proportion that is, substantial to my financial statement. Substantial to my financial statement, because 600 crore inventory in front of 200 crore turnover, I could see the impact is substantial, huge. I don't have any fixed asset. I don't have that much, balances, but the standalone impact of the inventory will kill everything. Third, let's say, for example, it is not related to the accounts, but it is related to the disclosure. So, in case of disclosure, it is related to fundamental to user understanding. If a disclosure is of such nature that is fundamental to the user understanding, and that is wrong, that is there is a misstatement in that particular disclosure, okay, which is fundamental to the user understanding, I could say the impact of misstatement is material plus pervasive. For example, going concern. If there is a misstatement in the disclosure of going concern, which is material in nature, by default it will become pervasive. Reason because it's fundamental to the user understanding. If these conditions are present, I could say the impact or possible effect of misstatement is pervasive. And material, I decide with respect to my materiality. Now, there is one good question. If we don't have information, then how we can identify what it could be its possible effect? If we don't have information, then how we could identify its possible effect? Okay, so in that case, you need to understand the information which is missing is confined to one particular area or multiple areas. If the information which is missing is confined to one particular area, what is the balance of that particular area? Is it of substantial nature? Let's say, for example, inventory. In this case, I don't have records, inventory records. Management has shown inventory 600 CR, but I don't have records. I cannot do physical verification. I don't have information to substantiate the inventory, but I could see if there is no information, then I could say there could be a possible effect of misstatement. But in this case, because of the inventory's amount included or the substantial portion of the inventory included, the possible effects becomes pervasive by default. Or let's say, for example, long-term contracts. Okay, I don't have any information available for the long-term contracts, which can affect to sales, which can affect to warranty, which can affect to my accounts receivables. A lot of things are there. I cannot gather more details about even the from other audit procedures. Like I cannot check for the subsequent receipt of the account receivables because they are long due, outstanding. We don't have a data's confirmation. Same way, if there is a missing information about multiple areas, revenue, data, warranty, everything, and together you identify, okay, this is not confined to one particular account or specific item, but the missing information is related to multiple things, then again it will become pervasive. In this way, if we don't have an information, we need to assess the possible effect of the information. Now, let's say, for example, disclosure. Management is not providing you any detail with respect to its going concern, use of going concern assumption. Management is not sharing any details. Let's say you have identified events that cause significant, doubt about entity's ability to continue as a going concern. Or you think there is a material uncertainty, but management is not providing you any answer. How the management will deal with this material uncertainty? What you will do in that case? So you don't have information about the disclosure which is fundamental to the user understanding. That's a critical matter. And for that, the misstatement or the possible misstatement in that disclosure could be pervasive. And if the possible misstatement in that disclosure could be pervasive, I will issue disclaimer of opinion. Clear? Any doubt? Any doubt? So now I understood what is qualified opinion, what is how adverse opinion works, how qualified opinion works, and how disclaimer of opinion works. Okay. Now we need to see what changes this difference in opinion brings into my audit report. Okay, what difference this brings to my audit report? Okay, so this is a qualified opinion as of now. And to be frank, adverse opinions are very hard to find. And that's a good thing, actually. But so this is a qualified opinion. Now, what are the changes compared to the unmodified opinion? I'll show you. One, when I say qualified opinion, okay, when I issue a qualified opinion, okay, I say that in our opinion and best of the I specifically say that in our opinion and to the best of the information and according to the explanation given to us, okay, except, this is very important, except for the effects and the possible effects of the matter described in the basis of qualified opinion. This is something new which was not there. So I say except for the effects of the possible effects of the matter described in the basis of qualified opinion. Because this is the qualified opinion, that's why I'm changing a bit of words, like except for the matters which are enumerated over there. Okay, I have obtained all the information. Okay, and there is another thing, based on the consideration of the reports of other auditors on the separate audited financial statement or financial information of the subsidiaries and associated and consolidated financial results. Okay, it gives a true and fair view in conformity with the applicable accounting standards and everything. Now, when I say basis of qualified opinion, see how it is drafted. We draw attention to note 6 of the consolidated financial result, which set out the fact that this particular industry has incurred losses during the quarter and year ended this March this, as well as during previous year, its current liability exceed current asset. Purchase power purchase agreement with this has terminated. Plant is remaining unoperational. Certain lenders has filed application under provisions of IBC for debt recovery. Okay. The events conditions indicate material uncertainty exists that may cast significant doubt on entity's ability to continue as a going concern. However, accounts of VIPL has been prepared on going concern for the factors stated in the aforesaid note. However, we are unable to obtain sufficient and appropriate audit evidence regarding the management use of going concern assumption in the preparation of financial statement of this entity. Now you will say this is going concern, then why we are not issuing adverse opinion, why we are issuing qualified opinion? So the reason of issuing qualified opinion, not the adverse opinion, because this entity is then consolidated into parent. To issue an adverse opinion, there are two conditions: material and pervasive. When I consolidate, can I say this particular portion over here is material? Yes, it is material. That's why I am qualifying the opinion. Fine. So materiality is there. Good. Can I say pervasive? Means, is it of that substantial portion, or is it related to of that nature that is affecting multiple accounts? So that is the important to understand. This entity could be, that not that much, what you could say, pervasive, or the effect of this particular could not be that much pervasive. Like it will not have that much asset or liabilities in front of the consolidated group asset or liabilities. So I'm not supposed to check only the parent, but I'm supposed to check in front of the whole group. So rest of the subsidiaries or, plus parent and the asset and liabilities of this subsidiary. I need to compare both to refer whether it's pervasive or not, and where if that fails, then I need to issue a qualified opinion, not the adverse. If it would have been standalone, if it would have been standalone audit report of financial statement, okay, then in that case it would have been adverse opinion. Otherwise, if this is consolidated opinion on the consolidated financial statement, that's why it is not pervasive. Rest is same. Material uncertainty we saw. There's a UM paragraph I will be discussing when I will be discussing 706. Okay. Then there is another change which I want to highlight. Other matters, again, I will be disclosing with 706. So, see, over here. So, when we are saying that, okay, this is the basis of opinion, and based on this, we have received the information subject to this, okay, we also provide that it gives true and fair view, and like there is going concern issue, so that is there, that is reported over here, so that's not again reported. But if you see, we believe that the audit evidence obtained by us and other auditors in terms of their report into other meta paragraph below is sufficient and appropriate to provide the basis for our qualified opinion. Not opinion, but the word qualified opinion has been substituted. Okay. So basis for qualified opinion. So wherever now we use the word opinion, we will say qualified opinion. Plus, we will point out towards the issues that we have referred. So this is how a change is there when you issue a qualified opinion. See, in standalone, if there is a going concern issue, if you think the use of going concern assumption is not appropriate, that itself in itself, it will become material and pervasive, because that is fundamental to the user understanding and it will have a substantial impact. But in this case, it's a consolidated. And again, how much material the subsidiary is in front of the group consolidated group, that will decide whether the impact is it should be adverse or qualified. Clear? Any doubt? Any doubt? I might have an adverse report. I'm not sure. Let me check. Because adverse reports are hard to find, and that is a good thing. But again, let me show you one more audit report, which is qualified. Same entity, but a year before. This is pertaining to FY 21-22. This is to show you that how, again, the wordings are there. This is standalone. Just a minute. Yeah. If you see over here, again, there's a qualified opinion. Okay. Now, if you see the again the wordings of the qualified opinion, okay, I'll show you the difference where the difference lies. In the second paragraph, when we say in our opinion to the best of our information and according to the explanation given to us, okay, and this is a consolidation case, okay, again they will use the word based on the consideration of the reports, but we will add a line except for the possible effects of the matter described in the basis of qualified opinion paragraph below the consolidated financial statement. This is something which is added over here, okay, this is something which we add for the qualified opinion. And again, we draw attention again to this particular area and everything which is there. So basis of qualification, which is enumerated over here. And we'll say that we believe that the audit evidence we obtain is sufficient and appropriate to provide the basis for qualified opinion. So this is how we alter the, we change the bit of the words for the opinion. Rest, everything will remain same. Any doubt? Okay. So what I suggest is, this was on the SA 705 about the adverse opinion, about the qualified opinion, adverse opinion, and disclaimer of opinion. In the next lecture, we will be continuing the SA 700 series. I will be taking out some more audit reports, which will have the disclaimer of opinion, which will have the adverse opinion. We will discuss that, how the wordings are drafted in that audit report, and then we will proceed forward for the rest of the SA 700 series standards like 701 key audit matters, okay, 706 EOM and other matter paragraph, okay, and accordingly we'll discuss the impact of those on the audit report. So I'll suggest please guide read those standards in detail, okay, 701, 706, so that when we are discussing in the next lecture, you will be having somewhat clarity about the topic and it will be more helpful to you. Okay. Also, please provide your feedback to us that, okay, whether you are liking the lectures or not, whether you want anything additional from that, or what you need. Are you benefiting from this lectures the way we are conducting? So any feedback that will be really, really helpful for us to understand what you need further. Okay. Thank you, guys. Thank you for your time. I'll see you in the next lecture. And for those who want to see when is the next lecture, you can refer to the schedule on the BOS portal, okay, or on the BOS app. That is available over there. You can refer the schedule from there. And just a minute, it's by. We have next lecture on Saturday morning, 3rd June, okay, on the 700 series itself. So I'll see you in the next lecture then. Thank you, guys. Thank you for your time. Have a nice day ahead.